In Focus with Jeremy Szafron is brought to you by Swan, the real Bitcoin company.
Welcome back. I'm Jeremy Szafron. Wall Street is attempting a reversal today, but the volatility is unrelenting. Now, after the sharpest sell-off since April, markets have stabilized briefly following President Trump's speech in Davos, where he ruled out military force in Greenland. The reaction has been chaotic. Bitcoin erased yesterday's losses earlier this morning, but has since rolled over again, currently trading down near $87,000, $80,000, $88,000, and struggling to find some stable support in this region. And gold, it's holding firm near $4,800, almost touching $4,900 this morning. A new, I think $4,888 was the new spot record, maintaining its bid despite the recovery in risk assets. And the bond market is what we got to be talking about. It's sending a different signal. Japan's 40-year bond yield reached a record high overnight, a move investors are watching very closely as a potential tightening force for global liquidity. And meanwhile, we're going to keep an eye on it, but the Supreme Court is hearing arguments currently as we go to air. And the president's authority over the Fed officials, adding another layer of uncertainty around the Fed. Obviously, that's a developing story. Now, there's a lot to get to, a lot of headlines, a lot of volatility. And to get some analysis today, I'm joined by Kyle Chassé. He's the founder of Master Ventures and a veteran crypto investor active since 2012. Now, he warns that institutional positioning at 95,000 remains a significant barrier for Bitcoin, regardless of a rally. Kyle, welcome to Kitco News. Good to see you.
Thank you. Thank you for having me.
We got to talk about this volatility. Let's start there. I mean, markets obviously rallied immediately after the president softened his rhetoric on Greenland. Wall Street has kind of nicknamed this pattern, buy the panic, buy the de-escalation. Some call it the taco trade. But looking at Bitcoin fading to like 87,000 right now, is the rebound kind of failing? Is this a temporary reaction to headlines under, a bond market that remains under pressure?
Well, for me, I'm not a trader, so I don't focus too much on short-term price and volatility. Although I do have a trading bot that really capitalizes on that. But for me personally, a majority of my assets and the assets that I manage sit in a longer time horizon. So I think that really what we should be looking at is why hasn't Bitcoin gone on a rally yet? We have the equities are up crazy, gold and silver up crazy, and then crypto has just kind of been still sideways. I mean, I guess from October 10th, we had that drop down to about 84,000. We had this recent rebound to about 97, 98,000. And then now we're back to 87,000. And 87,000 has just kind of been a magnet for a long time. Every day I make videos, and before we had this rally to 98,000, it would just seem like it was stuck at this $87,000 number. We'll see if that continues to hold up. But I believe the answer to that is the fact that we just don't have a couple of major things. One is quantitative tightening, and these liquidity cycles have always underpinned the movement of Bitcoin and the crypto markets. And, according to most people in crypto, they were expecting a 4-year Bitcoin cycle, which I believe is completely broken by now. Why? Because the 2017 and 2021 bull markets were led by favorable monetary and fiscal policy. We had low rates, we had inflation, we had money printing like crazy, and we were in officially quantitative easing in those cycles. When they turned that tap off, it ended both of the previous bull runs. And so we're just not there. We just barely got to ending the quantitative tightening. So the fact that we had a bull run in Bitcoin in 2025 was remarkable. It actually defied gravity. It should give some type of foresight to what will happen when we have the right underlying fiscal policy and monetary policies in place to support a broader move upward in Bitcoin and crypto. And so that's what I'm looking at, and it does seem to be moving in that direction.
Yeah. I mean,
there's a lot more to it, but that's the basis.
Yeah. I mean, if the cycle is broken, right, then the old strategy of just buy and wait for the post-halving melt-up obviously becomes dangerous. So what replaces it? I mean, what is the new signal viewers should trust more than the cycle? Is it ETF net flows? Is it a stable coin growth? Is it real yields? Is it credit spreads?
Yeah, it's a good question. Mostly Bitcoin crypto does revolve around liquidity cycles and the policies that I talked about. there's another big catalyst that the whole industry is kind of waiting for, and all the financial institutions are waiting for it too. And that is the Clarity Act. Now, it was supposed to be voted on, a couple weeks ago. That didn't happen. It got postponed. The banks are trying to hijack that bill by they don't want to see yield allowed in stablecoins because, according to one report, that might sacrifice up to $6 trillion or something in deposits from banks, and then they argue that will reduce their demand, their reserves, essentially reduce their ability to write loans and expand the money supply. But anyway, that's what's happening right now. So what that means is that you have a lot of corporates, a lot of people who want to start companies in crypto, and a lot of capital that's just waiting on the sidelines, waiting for some clarity. Because when you're a huge company and your legal team is saying, "Hey, yeah, I know you want to move in this direction, but we should just wait." At this point, it's in the very, very near future. We'll get clarity, and then we can move. And so you have that, I think, as a big deal. Plus, we see, why Trump is calling this the golden age, I believe, is because we see the rate of production in the U.S. really growing. A lot of reports I've seen put GDP growth by 5% at the end of the year, which kind of for decades it's been sitting around 2.5%. We had some exceptions with COVID and things like that where the recovery was really strong. But when you look at these unprecedented kind of 5% numbers on GDP growth, that leads to a broader expansion of capital, higher valuations and equities, and it's actually a perfect environment for risk on assets like Bitcoin and crypto. Now, all of this is going to take time. This is just happening. Again, we start to see stealth QE a little bit right now with Fed and the balance sheets. But I do think that when we get the new Fed chair in place, he's got to be in line with what Trump wants him to do. He's going to appoint him. So, and we know that Trump wants interest rates around 1%. Even if we get anywhere close to that, it's going to be a very good condition. So all of these things kind of line up and tell us what we can expect throughout the year.
Yeah, it's been interesting. I mean, even this morning I was listening, I think it was Donald Trump Jr. that was on MSNBC or Fox Business talking about how the banks are scared around deposits and compliance. So, I mean, get a little bit specific here. I mean, what changes the day that law passes? Is it banks custodying crypto? Is it stablecoin rails expanding, new ETFs? Or is it just institutions finally kind of being allowed to allocate without career risk? And I guess the question is what is the realistic timeline? Is it weeks, months, later this year?
I think it's all of the above, the things that you mentioned. We know back in 2017, 2018, 2009, I mean, I've been covering the growth and the testing phases, and all the banks, every single one of them started testing this infrastructure back in 2017 and 18. Most of them have already built the rails. Most of them have already built a lot of the technology into their applications. They're just waiting for what the regulation is so that they can put in plan what they've been planning already. Mm-hmm. And that's going to open up a lot of the financial institutions are going to start offering stablecoin. Why? Because it's a more efficient mechanism of transmitting cash. You can do cash settlements instantly, verifiably on chain versus T+1, T+3 days for settlement. You get to reduce intermediaries in that transaction, again reducing costs, reducing time, and so a lot of my question always is when people talk about stable coins is, well, you can't really invest in stable coins, and the fact those are usually tied to the dollar, which is being debased as we speak. So it's probably not a good idea to hold a lot of value in stable coins, but for a lot of people in other countries, it doesn't matter if the dollar is being debased. They are. I just read something today. Actually, I just saw a post. I'm not sure if it's true or not. I don't have the source for it, but it came from a reputable account on X saying that the Bank of Iran had just bought $500 million in stable coins, USDT, and that's pretty interesting. But if you are in a country where you don't have the luxury of a stable currency, the dollar is going to look very, very appealing. But I think in terms of the Clarity Act, allowing, implementing these things to your customers. So the day that Bank of America and that JP Morgan and JP Morgan is often talking about stablecoins and how they think it's going to make a massive difference in financial rails and how efficient the things are. But the point is that it's getting people comfortable with digital assets and wallets and things like that. And I think that's really important for the growth, because a lot of people are just afraid to even go there in the first place. Setting up a self-custody wallet on MetaMask or whatever is a daunting task. My mom's been in Bitcoin since 2015, and she's still nervous every time that she makes a self-custody transaction, making sure that she does everything right, and she practices all the time. It's a lot of, but as this infrastructure gets built out, as we get better UX and UI, and it's being now more commonly used in the apps that everyone uses every day anyway, like your banking apps, and people that are going to start accepting cash and stablecoin, everyone will have more familiarity with this. And this just generally sets the stage for more people being able to understand digital assets in general and stablecoins and Bitcoin, things like that. So it'll make it easier for them to use. They'll understand it better. And the other one is the allocation from big pension funds and big funds, endowments, things like that, that have been wanting to invest, but just again, want that clarity, because a lot of the clarity is about who manages the industry. Is it SEC or is it the CFTC?
Yeah. And I mean, the pushback, obviously, as we've heard, regulatory clarity is coming for years, and markets often front run it, and then they sell the news. Bring it a little bit more actionable here. I mean, what's your base case if the Clarity Act gets delayed or watered down or doesn't move deposits the way people expect? What plan B for Bitcoin in Q1? What is it? I mean, if regulation doesn't show up as the catalyst?
Well, unfortunately, I don't see many catalysts in Q1 that are really going to make a dramatic effect. I think that we're going to have to wait until, I think there's a couple of major catalysts that come post tax season, right? So, right now, I don't know if it's actually official or not, but the Trump administration is promising these massive, enormous, never seen before kind of gravity tax rebates. I believe the number is somewhere between $11,000 and $22,000 per household. So that puts more money in people's pockets. More money in people's pockets, one, means that they have a little bit of breath there to catch, not thinking about how they're going to afford next month's rent, and maybe now are starting to be interested in gambling a little bit. For Bitcoin to move in meaningful ways, we do need institutions to buy, which I think is the Clarity Act coming, but then we also need retail to participate to see broader upside in the entire total crypto market cap, which includes what a lot of people are very interested in, is this kind of mystical altcoin season that makes a lot of people a lot of money, especially if you can not get greedy and try to sell those altcoins while you take advantage of an altcoin season. But that needs retail to participate there. People need access capital in their accounts. And so you have tax rebates, and then the new Fed chair coming into effect May. But I think that when we announce that, as you rightfully mentioned, the markets are forward-looking. I don't think that the Clarity Act is priced in, because I don't think that we know what it's going to be yet, since we don't have the final draft and we don't know who's going to do what. And I can't imagine it's still priced in, because we've known about it for over a year now coming. The new Fed chair, he might be nominated and then chosen by Trump very, very soon, this week or next. And if he gives essentially a speech on how his policies are going to be, and that's dovish, I think that's going to be a huge catalyst. So coming in, and meanwhile, you'll have the liquidity pipes still opening up from this new regime that we're likely headed into, which is going to start slow and then I think accelerate throughout the year, this quantitative kind of easing, but it'll be called something different.
Yeah, the 55 billion. We'll get to that. I want to ask you, about institutional positioning. We must also look at supply level. Strategy filed an 8K confirming recent Bitcoin purchases of over 22,000 units. Based on the filing, their average cost basis is approximately 95K. Obviously, Bitcoin's trading significantly below that level today. Does the 95,000 price point now act as technical resistance? Is it resistance because of selling pressure, or resistance because of positioning and hedging around that level?
Well, 94.5 thousand has been the 50-week exponential moving average, and that does act as a pretty good indicator of where we see support and resistance. And when we see, that's why a lot of people who believe in pure technical analysis believe that we are officially in a bear market, and we failed to kind of stay above that. We had like 5 or 6 days above 94.5, but we couldn't close the weekly candle there. And obviously, the longer time frame that you stay above these levels, the more that you can have conviction you're headed into kind of flipping that from a resistance to a support zone. So I do think that in a lot of this stuff, I mean, a lot of the money that's moving markets is trading from hedge funds and large players on a regular basis. So these numbers still do hold some effect. In the long run, probably not, but in short term, it does seem very relevant.
Yeah.
So right now it's back to a resistance zone for us, and 87,000 where we're at now, like I said before, seemed to be the number that it kind of sticks to. So even if it kind of like comes down a little bit to 85K, maybe we revisit 84K, but it'll bounce back to 87, and then if it even goes 90,000, 92,000, it probably will come back until we have a solid breakthrough of that 50-week moving average.
Yeah, that's what I was going to ask. I mean, does Bitcoin need to reclaim that 90,000 first to kind of first, I guess, stabilize sentiment, or is it that 95,000 the only level that actually matters to the bulls?
Well, again, I'm not a technical analysis genius, but I do look at what other people who I believe have a better opinion and more accurate than I am. But a lot of people believe that the reason that we went down to where we did was because there was a CME gap, and the CME gaps are filled 97% of the time. So, it's almost always we go back and revisit those numbers. And there's another one right now set at 93,000. So, just from a technical basis, it does seem like probably within the next week or two, we get back at least to 93,000. Maybe we haven't hit that 94.5 again and hover around there. Then the question, it becomes exactly the same. Can we break that 94.5 with conviction and for a long period of time?
Yeah, interesting. I wanted to ask you about the kind of the strategic setup, because Goldman Sachs maintains a bullish outlook on commodities while Bitcoin attempts to find its floor here. I mean, let's define a little bit of parameters for the audience here in terms of metals. And for metal investors, I mean, does I don't know if you've been watching this. I know you're a Bitcoin guy, but I mean, does silver need to confirm gold here, or is gold just leading on its own?
Yeah, I watch them very closely, mostly because I'm super bitter that I didn't jump on the train.
At least you admit it, my friend. At least you admit it.
Yeah, I mean, it's never been a thing that I've paid attention to closely until the past year. Also, because sometimes I have to get on and battle Peter Schiff and talk about this thing. And even if I want to just talk about gold only, he still brings in the Bitcoin versus gold debate.
Yes.
And for the last year, he's had time to gloat and walk around like he's a genius. But I believe that that'll be short-lived. And I think that I'm not sure about gold correcting. I do hear quite a few people on the All-In podcast and things like that. And I think even Eric Trump recently said, but he's obviously biased. But he said that, likely we'll have a correction in gold and it'll flow into Bitcoin. And that's what has happened historically, is we see these gold kind of running up first, and then at some point when the liquidity conditions are right, we do see, because do you really want to buy a chart that looks like gold does right now? That does seem like a parabolic move that is very, it always has been very, very risky to chase any of these green candles, especially into parabolic moves, because you never know when the top is in and that could have a massive correction. So I think that, gold and silver seem to me right now in this zone where it's already seen significant runs. Could it do another 2x from here? Yeah, it could, but also it could fall off a cliff and correct, and money could flow into a risk asset that hasn't run yet, which is Bitcoin. Yeah. But another one that I'm looking at is copper. Right. Mm-hmm. So copper has this really weird chart that has these, since metals have been running, copper is usually lagging behind those other two. But when it starts to run, just like when silver started to run, it usually has this kind of the same really quick price reaction response. And copper is one of the most useful metals in manufacturing today for all the tech industries that we're looking at, for AI, for EVs, solar, all these things that rely on the actual use of copper. And that's all scaling up. And we're massively underproducing copper for the demands that we need in the future. So I am looking at copper. If you look at the chart, though, you'll see the pattern it does is kind of has a nice little run up and then a steep 30-40% sell off. And it picks back up from there, boom, again, and then another huge steep sell off around that same thing. So right now, the chart's looking pretty parabolic again. I'm hoping that we see some sort of massive correction again, 30-40%. And then I'd be looking to take a position in copper.
Interesting. Over on the futures side. Okay, well then let's talk about Bitcoin in its entry spot. I mean, what kind of specific price action or even macro data do you require to add crypto exposure at these levels?
I wish I could add crypto exposure. I mean, that's all where 90+ percent of my net worth exists. Well, yeah, actually not much anymore because I have a couple of good equity investments that have done really well. But from liquid capital, majority of it is already in crypto, and it's 50. Like from I would say that 80% of that crypto is in Bitcoin and ETH, split 50-50, and the rest of it has been consolidated into mostly a few high conviction altcoins that I believe for one reason or another will outperform once the markets pick up. And if you get some of these altcoins, and they can do crazy multiples that make up for everything else. It's not uncommon in a bull market to see a 10, 20, 100x on a coin in these kind of irrational, crazy bull markets.
Yeah.
So that's where the majority of my capital is. As far as signals that maybe other people want to look at, again, it's going to be the most favorable conditions for a Bitcoin liquidity cycle. And it's pretty tightly correlated to how much liquidity is being printed. And so a good thing to pay attention to is global M2, probably even more important, is going to be US M2. We're going to look for the interest rates and see if they continue to lower. We're going to pay attention to GDP. So forward-looking, a lot of the nowcasts, these kind of future-looking predictions on things like GDP are predicting 5% growth, and that growth is extremely relative to risk assets. And likely to see, if we see the dollar continuing to weaken, that's also another good sign. So these kind of things you should watch on a regular basis and say, how is that all going to affect risk environments? And Bitcoin thrives in a risk environment.
Let's go back to those altcoins, because I know that I'm going to get comments right now saying, hey, you didn't mention any. I mean, from a structural standpoint or a perspective, I mean, which specific altcoin sectors? I mean, is it settlement layer tokens? Are you talking smart contract platforms? Where do you see is having the strongest liquidity support right now, and why? Give me kind of two names.
Well, man, it's hard because these are things that I mostly keep personal for the reasons of them being high risk, high reward. But I'll say it with a disclaimer that especially one I'll talk about is highly very high risk. But if you go down the rabbit hole and look at the people who are building it, are likely building it, it can be extremely, once they come out of stealth mode, would be extremely massive, and it would be highly undervalued right now. And that what I'm talking about, a lot of people who are watching this are probably going to think I'm crazy for this, but there's a ticker called Tibber, and it sounds like an altcoin because it's like a frog with some glasses, but it's not. It sounds like a meme coin, but it's not. It was created by Ribbit Capital, and even though they haven't directly confirmed it, the guy Mickey who founded Ribbit has opened like 5 LLCs under the name Tibber, has transferred all of the Robinhood shares. And for those who don't know, Ribbit Capital is one of the most successful and greatest VCs of all times. The guy who founded it, Mickey, is originally from Venezuela. He kind of has that Bitcoin core ethos of trying to help the smaller people. And so they fair launched this token January 2025. And for anyone who's paying attention to it, and they go and do a little bit of research, and there's a X account that covers it on a daily basis called Altcoinist. And if you check it out, you read the story, it's really fun what they've done. They've built in this whole Easter egg hunt kind of thing where once in a while they'll drop direct kind of clues that tie those projects together. And so for me, the risk reward there. It's kind of like, for those who know about Chainlink is a kind of that mycelium that connects all different blockchains and makes them be able to talk to each other. But what Tibber or Ribbit Capital is building is mostly AI infrastructure with regular financial structure, we have KYC, know your customer. And that is everyone who signs up to a financial platform must show their identity and verify who they are, so we can track for things like FinCEN and all like sanctioned people or people who should be using these platforms. But Ribbit Capital strongly believes in this idea of KYA, which is know your agent. And if you're following AI at all, you know that the plan in the future is to have AI agents working for you across all sectors of your life, including trading and making finance, looking at DeFi and yields and things like that. So even large banks are starting to use agents for their trading desks and things like that. So if an agent wants to communicate with each other and send value back and forth, then of course they should be identified as well, so we know who they came for, who created it, things like that.
Yeah, interesting.
Also, you can identify one amongst billions of agents and how they are. So they're building that whole infrastructure there. So that's one, and I had to give it the full context. I know it was a little long, but
no, it's all good.
For people not,
is that, and Kyle, I mean, is this a trade for a move or an investment you'd hold through a 50% drawdown?
Well, if you look at the chart, so one thing I like about it, as of time of recording right now, it's about $150 million fully diluted valuation. But it seems to have a really, really hard floor right around 140. Through October 10th, through any other kind of major sell-offs, it gets bought up by somebody. And my guess, I'm definitely speculating here, but I probably believe that it's like Ribbit Capital team who probably supports this. Again, totally speculating here, but it doesn't seem to want to drop below 140 under any circumstances. Whenever it approaches that level, it's bought up no matter how bad the market's doing. So to me, it's a little bit silly, but I believe that that's some sort of artificial price floor set. So I don't think that we'll get a 50% correction, not this year. And that's why, another reason why I'm continue every single day dollar cost averaging into the project, because I don't think there's a lot of downside to go. Most of the people who are holding this, there's like 65,000 people holding this token, and none of the big ones, none of the people who bought it early, which again, it was fair launch. So most likely the people who bought it early were all part of the team in the inner circle there. And, but no one seems to be selling tokens. They're all holding for the day that the stealth announcement, that they come out of stealth. And so your question, am I holding as an investment or is it a trade? It's great either way. So one of the reasons why, like a lot of people, and I agree with most of them, to consolidate right now into Bitcoin and Ethereum and stable coins for, and just wait until altcoin season comes to actually put any money in altcoins. But to me, the risk of not being in this project is a great one. Why? Because one day, unannounced, they will reveal that they're coming out of stealth, and that this powerful team also, just to give a little more context, Mickey and Ribbit Capital bailed out Robinhood when they were like in massive debt and the company was about to fail. So Vlad from Robinhood owes them everything essentially. They were one of the very, very first seed investors in Coinbase, Revolut, a lot of other payment infrastructure. And so we already know there's going to be partnerships with all these guys. There's been kind of more breadcrumbs dropped between all of them that allude to that. Yeah. So I believe that the day they come out of stealth, you see an instant repricing of 3 to 5 to 7, maybe even a 10x. So if that's a trade that you're looking to do, you just sell on the day that comes out of stealth. But
interesting.
But it does look like this is headed for more like chain link types of valuations rather than a billion, for example. So for me, it's a bit of a more long-term hold. Yeah.
Okay. Hi, Alpha. I like it. You gave us a ticker. Many don't, so I appreciate that. Okay, last thing here. I mean, give our viewers kind of your final takeaway. I mean, if someone's watching this market right now and they want to stay ahead, or at least on the right side of the next move, I mean, what's the one thing that they should do? And one mistake they absolutely kind of need to avoid in this market? What makes you sleep peacefully?
So leverage is very, very dangerous right now.
Yeah.
I think that anyone playing with leverage is playing with fire. And I've just heard so many stories of people that I know personally and friends of friends who have been totally wiped out. I mean, it's led to suicides that I know. So, definitely don't play with leverage. It's not the right time. We have this very volatile market. It doesn't have a direction chosen at all. And, if you want to gamble, gamble when the odds are stacked against you, when we have a market that's directionally moving, let's say, positive, right? Because when we go into a true actual bull market where it's obvious, then it's like very, very hard for a period of time to lose these leverage longs. But anyway, I think leverage in general is pretty dangerous unless you have a really great strategy, unless you're one of those 1% of traders who actually know how to make money trading. But that's what I often see happen when new people come into the space. They treat crypto like a stock, and they want to learn how to trade it, but learning to trade is very, very expensive. So and not easy, and a headache. So for me, a better strategy has always been just buying and holding. I mean, that's been worked out really well for me so far, and I think there's still a lot more upside in these assets. These are these assets like Bitcoin, Ethereum, probably Solana. These are going to end up being multi-trillion-dollar assets, in the next 5 or 10 years, and so the upside is still enormous.
Yeah. All right. You heard it. No leverage. Not in a tape like this. I'm glad you said that. A lot of people didn't even know what it was to use margin, and I think they figured it out the hard way, sadly. So appreciate their time.
Yeah.
All right, Kyle Chassé joining us. You can also follow his YouTube channel. I went on this morning, some great little analysis. Thanks for this.
Thank you.
All right, Kyle, appreciate that. Okay, the headline's cooled, but the bond market is still the scoreboard here. We'll continue to monitor that $95,000 level on Bitcoin. And just a quick note, we'll be back on the air from Vancouver, from the Vancouver Resource Investment Conference this weekend. I know we are just away for Saudi Arabia, but we're coming back to air. It's going to be a busy show season, and we got some great guests lined up for you. So be sure to hit subscribe and stay tuned. Also, a big thanks to our sponsor, Swan Bitcoin, your partner for generational wealth. You can get started at swan.com/Kitco. I'm Jeremy Szafron. Thanks for watching. We'll see you next time.
Swan is the premier Bitcoin wealth platform serving leaders of families and businesses. Swan's mission-driven team simplifies Bitcoin investment, custody, and security, bringing you concierge service, world-class research, and exclusive events.